नमस्ते दोस्तों और स्वागत है आपका आज के वीडियो में। टुडे वी आर डाइविंग डीप इनटू हिंडवेयर होम इनोवेशन लिमिटेड HHIL। यह कंपनी जिसके प्रोडक्ट्स आपने अपने घर में देखे होंगे, जो कि अभी एक महत्वपूर्ण मोड़ पर खड़ी है। वी विल एक्सप्लोर व्हाट्स गोइंग ऑन, द चैलेंजेस दे आर फेसिंग एंड व्हाट इट मीन्स फॉर द इक्विटी इन्वेस्टर लाइक यू। सो ग्रैब अ कप ऑफ चाय और कॉफ़ी एंड लेट्स गेट स्टार्टेड। पहले थोड़ा हिस्ट्री जान लेते हैं। हिंडवेयर होम इनोवेशन पहले HSIL यानी हिंदुस्तान सैनिटरी वेयर एंड इंडस्ट्रीज लिमिटेड का हिस्सा थी। HSIL एक बड़ी कंपनी थी जो कि बाथरूम प्रोडक्ट से लेके पैकेजिंग मटेरियल तक सब कुछ बनाती थी। बट इन्वेस्टर फेल दैट पैकेजिंग बिजनेस विच इज कैपिटल इंटेंसिव एंड B2C business were very different. So to unlock value and let each business grow individually, HSIL was demerged, and this led to the creation of HHIL, which focused on marketing and sales, while HSIL retained the manufacturing. However, it did not end there. To solve the issue with the related party transaction, HHIL bought the manufacturing plant from HSIL, and this resulted into a debt of 650 CR for HHIL. So, what was once a trading company now had a lot of manufacturing assets, and this is a big factor in understanding the current situation. Now, let's talk about the present. The company's recent earning call revealed some significant headwind. Like Q2, results were impacted by a sluggish demand environment. The company reported revenue of 630 CR for Q2 and an EBITDA of 40 CR, which is not a great. But here is a catch. HHIL is undergoing a major internal restructuring. They have merged sanitary ware and faucet teams, which consolidated warehouses from 29 to 11. Also, they reduced the service setup from 2 to 1. While these were aimed at cutting cost and improving efficiency, they have also led to the job losses affecting over 350 employees. This internal restructuring is coinciding with weak market, impacting revenue and profitability for them. This is what we call headwind in finance. Now let's break down the performance of each business segment. The bathware segment, which includes sanitary ware and faucet, saw a revenue of 360 CR for Q2 with an EBITDA of 34 CR. While the overall demand was sluggish, the faucet category shows some positive momentum. However, the company has lost some market share during this period. The consumer appliances segment, which includes kitchen appliances and seasonal products like coolers, is struggling with a revenue of 83 CR with negative EBITDA of 7 CR. The company is working hard to cut the underperforming categories and focus on profitability in kitchen businesses. They want to shut down unprofitable parts of the business and focus on getting this business into profitability. The pipe business reported a revenue of 187 CR with an EBITDA of 13 CR. Raw material price volatility has been a challenge, but CPVC products are doing well and account for a significant portion of the sales. In short, every business segment is facing different challenges. The bathware segment faces margin pressure, consumer appliances are in loss, and the pipe business is tackling raw material price volatility. इक्विटी इन्वेस्टर के लिए कुछ इंपॉर्टेंट पॉइंट्स है जिन पर गौर करना चाहिए. HHIL admitted to losing some market share in bathware to competitors due to internal restructuring. The company believes this is temporary but acknowledges the need to regain its position. Investors should track their market share recovery. The company has not changed its overall pricing policy in last 4 years, but there have been adjustments in market schemes which may have impacted dealer relations. It is important to note that the schemes are made at zonal level and not the same across the company. The company is aiming for a 200 basis points margin improvement in bathware in FY26 over FY24, which is around 18% jump, and 1.5 to 2% margin expansion in the pipe businesses by March 2026. However, these targets are subject to market condition and input price fluctuation. Now let's talk about some of their future plans. HHIL is constructing a new pipe manufacturing facility in Roorkee, which is expected to operational by the end of FY25. This new plant can significantly ramp up their pipe production capacity and help their EBITDA. The company's debt has increased from 400 CR to 1000 CR between FY2022 and FY24. This is primarily due to the acquisition of manufacturing plant. To reduce the debt, HHIL is undertaking rights issue of equity shares. The rights issue is crucial for the company to lower its debt burden, improve its financial position, and increase profitability in future. Cost cutting is a major focus for the company. They are working to reduce manufacturing cost, especially in sanitary segment, where they have achieved an 8 to 10% reduction in manufacturing cost due to the process improvement and waste reduction. The company has also implemented Industry 4.0 solution in their plant. Overall, the management is cautiously optimistic. They believe that the restructuring efforts combined with an improving market will lead to better financial performance in the coming quarters. They are focusing on cost efficiency and profitability, especially in the consumer appliances business where they want to become profitable soon. However, there are still challenges like volatile raw material price, slow demand, and intense competition to be considered. Hence, it is not very clear if target of improved profitability can be reached. Now let's talk about some of the potential tailwinds. The redevelopment project happening in many cities could increase demand for bathware products and pipes. Also, long-term growth story of housing sector could benefit them. Hindware Home Innovation is a company in transition and it is facing some challenges but is actively working to turn things around. It's a tale of strategic moves, market challenges, and hopeful recovery. As an equity investor, it's crucial to monitor their progress, their margin recovery, their market share gain, and if the new plant will become profitable for them. Keep a close eye on the quarterly result, listen to their earning calls, and do your own research before making any investment decision. Thank you for watching, and don't forget to like, share, subscribe for more such analysis.